We've got Merritt Black, like I told many of you about, from SMB Capital, and I did a couple things. I gave you the image of two circles that overlap, and it's important to know that you take someone else's skill set, and I like the simplicity in which Merritt looks at profiling, and you overlap it with some moments of when to execute, and you got something in the middle that is pretty powerful. So to give you just a quick bio of Merritt, he's if you're not familiar with SMB, they're a big prop firm in New York, been around a long time. They mostly were stocks, but recently they've opened up a futures arm to their operation in which Merritt runs. So I did a event for his group a couple weeks ago, went real well, and pretty much what we did and what we're going to do today is show his screen a little bit, show my screen a little bit, create an opinion of what he thought maybe coming into these markets, and then look back on a footprint with edge zones to see where there were some good executable moments of that opinion. I like Merritt's simplicity in the way he looks at profiling, and it doesn't, to me, I like just when guys are experts at being simple, and he reminds me of that. He also came, some of you guys might even know him and met him in July. He was one of the attendees at the Chicago Trading Workshop that we had over last summer. So I think it works out. One thing I want to add, just so nobody forgets, is keep an eye on your screen. Valentine's Day is tomorrow.
Don't forget.
I want nobody to get in trouble, and it affects their trading. So, but Merritt, thanks again for coming. Is there anything you want to say to kind of introduce yourself?
No, not really. I think people can look us up, smbfutures.com, and got a little bio there and things like that. So I'm just happy to be here. I always like hanging out with you, Anthony. So let's do it.
I appreciate it. So just so you know, the guys in here have been through the course, and I know that these Tuesday meetings are always good because people keep coming back. They don't have to tell me I like it. People keep coming back, but they're not retail anymore off the street or some free event. Everybody has invested and done our program, so they're up to speed with a lot of stuff, and there's been a lot of great collaborative efforts at becoming better and better profiles in another room that we have. So I think a lot of them were looking forward to what we got. I think we could maybe start with your screen and maybe a profile showing some stuff in whatever you think, in oil or whatever you were really looking at today. Does that work for you?
Sure. Yeah. The two things that I had on my radar, like most days, would be the E-mini S&Ps as well as crude. Let's start with the S&Ps.
Do you want me to
I have up on my screen here?
Yeah, let me give you controls. Hold on.
Okay.
You should see something prompt you.
Let's see here. Screen of monitor 3. What's the clean option or not clean? Oh, that's probably just doesn't show your background.
Yeah, clean's probably better. Don't show your tabs at the bottom or toolbars. Yeah, I see it. Looks good.
You got this screen here. You see my mouse?
I see everything. Does everybody else see it? They should.
You should see two charts. One's a profile and one's a price action chart.
Yeah. Does everybody else see it? I would imagine they do. Just give me a yes. Good. All right, you're good to go.
Okay. So one of the things that's been so freaking fantastic lately, as we all know, is this volatility. But I suppose we also know that it won't last forever. But, and as Anthony said, I keep things pretty simple. I don't know if that's because I'm not the smartest guy in the room or what, but I think there's power in simplicity. I really do. I think people that are chasing all of these different things and making things extremely complicated, what happens is we run into a little problem, and that problem is that we're human, and we have a hard time making decisions under pressure. And there's all these studies that have been done that show decision breakdowns with the complexity of the systems. It's kind of common sense. But One thing, if we look at today, and I would imagine if you guys understand profiles, I don't have to kind of brief you on this, but the blue dot is where we open. The triangle over here is where we're at now. Each one of these letters represents a half-hour period. Pretty sure you guys already know that. The black lines protruding from the profiles is the value area, and the red line is the point of control. Again, I have a very clean, simplistic view, even when looking at profiles. So let's go back to the 9th over here. When this day opens up, we open up just below the prior day's value area, and we had a nice little balance on that day. Good excess low, good excess high, and a good distribution here in the middle. When I come into a situation like this, and we're going to be opening up right here, the first thing that I'm looking for, barring other higher time frame analysis and other things that we can bring into the picture, but let's keep this focused on just what we can garner from daily pit session only profiles. And right here, this would be, are we going to accept back into this distribution from the 8th, or are we going to reject that value and balance area and probe lower? That is the question at hand. And we got our answer in A period here. We put excess high across the top. B period comes back and retests this area, and we look lower, and that's that. That would be my bias. That would be a line in the sand. That would be a beautiful way to trade that day, and that's how I did trade that day. Coming into today, and look, and by the way, one other thing I'm going to kind of want to talk about and keep on theme here is the volatility. Look at the volatility of that move after we leave that area. Now let's go to today. We got a similar situation where we have a decent balance on the prior day. We've got our value and whatnot. Now, on this day, very, very similar as the 9th. Today, when we open up, I want to know, are we going to create excess on the high end or the low end? Are we going to accept back into the prior day's distribution? Or are we going to reject that area and probe lower? This is basic profiling stuff, but it's extremely powerful. And look at the volatility today. Unlike the day where we probed lower and rejected prior value, this day we actually accept into there, and look at the lack of volatility, but look at the retest of B period and C period that hold that area. So for me, once we see the first half hour of trade and we're really accept up into this area, all of a sudden 2640 becomes my line in the sand, where I essentially want to be a buyer looking for rotations up towards the point of control and possibly even up to the 2668, the other side of value and this main balance and distribution.
That was yesterday, the profile to the left?
That's right, the 12th. Okay. The 12th.
Okay.
Yep. So that was my take on ES coming to today. Because I had the line in the sand, I knew where I wanted to see how buyers and sellers were reacting. Excess across the low. We're accepting north of 2640. I want to be a buyer with risk against that general area, looking northwards. Very simple, and I don't expect a lot in terms of volatility. That's my take.
Now today, let me go into 40, and then what was your high side, 68?
68 would be the other side of that extreme, absolutely.
All right, now let me just pull over my screen here and give me a second. Today was in the S&Ps, and we'll go back and look at oil if you want in a second after I show my screens.
Should I hit the change presenter button?
No, I can
imagine you can take it.
Yeah, I can grab it. There we go. This should show my screens, my black backgrounds.
Got it.
That you guys are used to seeing in the room. So today was, and I didn't have a problem admitting, was a real whipsaw morning. So you talk about volatility, and this was at times tough volatility for me to get my head around because they fought over both sides of the open, which were around 40 even. So if I'm looking at what you're saying, we opened up at 40.75, right? I think that was the open officially.
Correct.
All right. And your line in the sand is below 40. So you're just on a profile sense, you're bearish below 40 and bullish above 40. You're not necessarily long above 40 every time and short below 40, but that's what you're saying is your line in the
As we
sand.
dive, as we dive into the details, I don't know if you can see this on your chart or not, but there was a nice little ledge overnight. I should have pointed this out. We bounced off of 36 quarter or 36, 1, 2, 3, and then 4 times coming into the open. And then finally at 9 or 8:35 y'all's time, we wicked through that area off of weak selling and just drove it from there. That is when I know what's up, but not until then.
So you're looking at it rejected below 40, and you don't know that until you see this
Well, take a
sequence
look
down
at the
here.
overnight trade if you can, and look at how many times we continue to bounce from 36s,
Yeah, here's one.
starting at 2:20 a.m. your time.
Right, yeah, I'll just go from right on the open, they rejected 36. Right here at 8 Central, they rejected 36. Right here at 5:20 Central, they rejected 36. This entire bottom of consolidation, they rejected it. All in here,
Boom.
they rejected it.
Yep. So I'm saying 40, but 36 is obviously, if we narrow it down as we kind of approach into there, that it's huge.
Well, and the thing is, with what you said, it's like, where is a moment? What I do is I look at a moment where we should have followed through. Like, I don't know
Mm-hmm.
this at this point.
Mm-hmm.
I don't know what's going to happen next. But what I do
Right.
know are what the things you just said. The amount of times that we went to 36 and failed, they're not going to continue to hold it. They got to go through it. So what should happen is continuation through 36.
Mm-hmm.
Now, when you get this, is the first moment that there's a good chance of rejection because it probed through at a point and a half and it didn't take long to jump back through at 3 points. So what I have, and guys in the room are familiar with this, is B to B moments, which is bearish to bullish, or bullish to bearish, right? A transitional moment on a smaller time frame. And sometimes I'll even paint the bar like this to say bulls took over on this time frame. Now, I'm not sure how long they're going to keep the leash, or even if they're going to keep it, they could give it right back. But at this
Mm-hmm.
moment, from a probability standpoint, the low has been rejected. And if I'm bullish, I'll play it from the long side. If I'm bearish and I still want to get short, my hand's off the mouse when I see this bar not just go up to 40 or roughly 40, but the speed in which it rejected, and I could see it in the green coming off that area. And then you had some red that they don't even stop here, meaning they get some speed below 36, and they come right back through it like it's not even there. So that's classic rejection. And then you overlap the coming out of balance, and they should probe lower. It's like what I say often: what should have happened didn't, and then the
That's right.
probabilities become the upside's the right side. Go ahead.
No, I just said that's absolutely right.
And so it's like the open not holding. I thought maybe when this was happening, I thought they'd hold the open for a rotation, not to be bearish, but they didn't even do that. I mean, there was no transitional moment back to the downside until even after this. I mean, you could see it walk up and you could see it hold this green edge zone a while above the open, but they took it back to 47 for a long time. Now, the way the morning developed, between 38 and 47 became a balanced area without even
That's
looking
right.
at the
And
profile, right?
47 up there, that was where VWAP was at the time for the Globex session. Excuse me. I'm sorry. That's wrong. It was at almost 45.
But at 47, 45, that area kept rejecting in the
That
first,
area, yes.
yeah, in the first hour, hour and a half. And there was a clear moment we were going to try to retest and go through 38 or through 47. They were just building too much pressure. But it was a big whipsaw in between there. So if you weren't trying to find the edges of those two, you probably got chopped up trading the S&Ps in the first 60 minutes. There was
That's one
one.
of the things I really want to stress about the profile and understanding context coming into the day. You are trading, if you're executing from anywhere in the mid 40s, you are trading from the middle of the fat balance area from the prior day, and that, more probabilistically speaking, is going to be a choppier trading area than the edges of those balance areas, which is what I highlighted as we started the call. It's just a recurring theme over and over and over again in markets. Price tends to trade one way as it traverses high volume areas. I don't care if you use market profile or volume profile, or if you just use price action and find where the prior consolidation areas were. Those are going to be the high volume areas. Price trades differently when it's in the middle of those zones, more times than not.
And one of the guys who's been with me the longest, Dave. Dave, are you here? He uses, he knows when to stay out. You know, that's one thing he's really become good at, is when not to trade.
When not to trade, absolutely.
And in the middle of those fat moments, either TPO or volume, are those times to stay out. The trade of the session was because I got stuck in the middle trying to play breakouts to the upside, took a small loss or a scratch. But the trade of the session, being patient, I believe was right in here. No, it wasn't. It was after this. It was
Right.
after identifying at this point, it's 9:30 Central. That 47's been tested a dozen times almost, it seems. They got to get it above there. And then the 38.40 on the downside. Something's got to give. But there was a moment where you had a dual breakout, and I think it was even after 9:30. Do you guys remember? I think it was 40. There was a time where I wasn't even there. The NASDAQ broke out and led us to break out to the upside. And I think it might have been in here just after 9:30 Central, where they finally released it all the way up into the 50s and 52, 53. And it was right in here. And it was keeping you out of the middle because we were, if you guys are looking at my cursor, we're banging around the open. And you know that there's a chance for a breakout above the top of this rotation. By the way, this is a 6 PNF. So you either got some selling that's going to come out through the bottom or some buying out through the top. And I often say this, the market doesn't know sometimes where it's going to go. There's a chance it is going to go lower, but something came in and made the shorts more nervous than the longs. And it could have been big buyers in the ES or a leader. So the NASDAQ had a breakout moment at the same time around 9:30 Central. So not only did it have a breakout on the edge, which is around 40.41, the edge of the profile as it was stacking out in the first hour or so, but it had subsequent support as it lays back down on 42, and that's where these zones help me kind of read the market and give you a second chance to maybe get in if you think that they're rejecting the bottom, or at least giving you a head start to catch this move back to the top. And then they finally get through 47 with some oomph right in here. This double stack green holds nicely on subsequent rotations, and they continue on through the 50s. But it was like this was a pretty quick push that did not really come back to bust your stones, because every other trade, it seemed like if you weren't scaling out, they were going to retest you and shake you out for a scratcher, nice winner into a nice loser. So, but to recap, like this morning, you didn't want to play around in the mid 40s because it was yesterday's, right, middle of yesterday's value.
Right. That's right.
Then it was working out where the same thing was developing through the first hour after the open, where the mid 40s was today's value in a way, whether officially or unofficially.
Oh yeah, definitely. Developing value.
So did you trade more S&Ps or oil
Oil.
this morning? Do you want to
Oil. I,
show
w- I was sure. We can
oil
move to that.
profile? Let me give you, I think I have to push it to you, the
Okay.
screen. I'll do it right now. Take your time.
Let me change chart books. There we are. All right. So coming into the session with oil, we had some nice overnight action that we could kind of take a look at first. I'll show you from just a pure price action perspective. This gray zone here is the overnight action from the 2:30 Eastern close till the 9 a.m. open today. And what we saw there was what I call kind of a compression move. So I look at these lower lows, lower lows, lower lows, kind of compressing into this general area here. So coming into the open, we had broken that down, okay? Now, there's just kind of a pattern for you. Let me find my Globex profile chart, which is the full 24-hour session. Let's bring that puppy over. And let's take a look at how that's unfolding. So here's yesterday, as you can see, the main area being this here. Okay, you can see that big distribution, little overnight stuff here as we opened up. And here we are overnight, last night. And what I often tell people this, they say, well, you know, the overnight high is important, the overnight low is important. Sure, maybe, probably, usually, but there's a deeper understanding. The overnight high or the overnight low is typically the overnight high or overnight low for a reason. So for example, this overnight trade opened here and it's trading up to the edge of this main balance area here. And it can't stay in it. It's got no choice. Perhaps longs are getting caught here, getting trapped. Long should go higher. It's an uptrend. It's higher highs, higher lows. Boom, stop them out. Market's headed lower. We rejected this kind of key critical area here. Retest it even later and continue rejecting until we open up down here. So here's that lower, pressing into kind of this area, but there's even more, right? It's not just this pattern that we identified right here. It's the fact, and you know what? You can even see it just on the volume profile and the price action there. Take a look at the edge of this right here, right? The edge of this main balance from the pit session from yesterday. We couldn't trade into there. So we're headed lower. Now we've got the price action pattern, which brings us into the open. Now, not only do we have that main balance higher, but on the profile itself, a very simple feature we can look at from time to time is here we're going to open. Here's the blue A here. This is the opening print. When we always want to look left, what's the first features you can find when you start to look left from that price? Well, we run into the ninth. What feature can we identify on the ninth? See if any of your guys in the chat can tell me what's the feature in this general area here from February 9th.
So when you say feature, what happened? What's the dynamic that played out on the 9th?
What is the feature? What am I looking at right here on this area of the profile from the
singles? They're saying
the singles, bingo. So this was a quality excess low that was put in. This market really, really, really sold off strongly from the poor low from the 8th. Great volatility, wonderful day. But we really get a bounce, a third of the day's huge trend into the close there, in the last hour of trade. So we've got this excess low with the edge of those singles around 76 cents, all right? So let's just draw that feature over here on the price chart. So we've got a couple things going on here just to kind of recap. One, we overnight rejected the main balance from the prior day. We put in a bearish descending wedge pattern, which broke. So an immediate reference as to the continuation of the downside would be immediately against, what is this level? 93 cents general area. Everything is an area, guys. Nothing is aligned to the tick. Everything is an area. The closer and closer you go down to kind of the things that Anthony's looking at and whatnot, yeah, you can kind of define it into a tick or two there probably, but it's still a tick or two or three. It's still an area. Don't get too caught up on to the tick type of stuff. It will make you slice and dice yourself to death. So I'm looking at the what do the buyers have as they try and retest higher in the open. We know we had a nice rotation down, kind of, we got that. So I expect buyers to be able to take control of the tape here. Let's see what they've got. I'm by this time I'm trading live in front of my crew, and boom, we get into a short because the buyers just were so weak as they tried to press. They could not take over our 76 area, the edge of those singles from the other day. So boom, sellers start to come in strong. I just hit the bids with them. I just join them. I don't try and get cute. I just hit the bids, get in. It's a momentum type of trade based on all the context that we've gone through here with all the profiles, features, and the price action pattern and everything that's going on. And I actually saw something interesting on the tape into these lows. So these blue circles are all my exits. So I scaled some initially, scaled some as I kind of saw the low forming here. It pulls back. All right, we expect it to pull back. We said this on the video. It comes down. And I saw something I did not like at all off of these two lows here. And I totally flattened out the trade. My target for this move, I forget the number exactly. Last week's low is like 58.08, I believe, down there. And I got some other references down there as well, longer term into this 58 area. So I was looking for that, and I called an audible and flattened out of the trade here based on some things I saw on the tape. So it'll be interesting to see what Anthony sees. And if you don't see anything down there, that doesn't mean,
because I'm looking at it as you're talking.
Okay.
It was
Cool.
8:30 my time, right? 9:30 roughly your time.
9:50 was that low, but Eastern time.
Okay.
So we'll just use Central time. So 8:40 was the first low that I scaled into and I thought was kind of troubling, and then the second low into 9:50. But yeah, the entry was just after 8:30. Absolutely.
After 8:30 my time, right? Okay. Let me share my screen. I'm showing this as if my screen's being shown. Hold on a second. Let me pull that up. Grab the screen.
And by the way, if I can't see the chat, but if anybody had any questions or anything, just stop me, just whatever.
Yeah, you know what? I should have made you organizer so you could see the chat. I'll do that in a second. I thought I did. Hold on. I'll stop for questions maybe around 11:45 because we got to stop this thing at noon. You're good till then, right? Noon Central?
Yes.
All right. So you guys are seeing my screen, right? My cursor?
Yep.
Let me make sure. Same screen. Okay, so this is crude oil. I'm looking at it on a 6 P&F. The zones are 600 threshold with about a 100 min diff. That's the criteria of Merritt to throw the green lines out. There'll be imbalances that won't have red lines. So right after, it's fair to say, though, coming into here, you're looking to play it on the short side after the open from your profile analysis?
I want to see what right after, as we approach 8 a.m., I want to see what do the buyers have? What can they put together as we come into the pit open and after the open?
So what I would look at you could see 85. That area is the top of this consolidation right before and then right after the open. So from 8 to 8, first 15 minutes or so, they can't get it above 85. I would look, if I'm looking for a short, I'm shaking the champagne below 65, below these final green zones and the bottom of all these consolidations. Let me throw my pen on it. So, there's no, if you're looking at the right stuff, it's not a rocket scientist to see that right now they keep rejecting the 65s on the downside and the 85s on the upside. And this is where the fight is. So if I'm short, and not to say I'd be short yet, but I know I'm probably pretty nervous or wrong at this point above that area. I would say I like when greens start getting violated to start saying that there's a better and better chance of going lower. And I can't say I would call this big down bar, but about halfway through it, when they clip this guy and clip these two, I'd have to be in a bearish transition. And you could see it light up red, not just all the way down here at 60, 65, but starting at 82, 76. They get through this green, and it's like coming off the edge of the top. When I say the edge, coming off the top down fast, generally they make a run at the bottom. And now the champagne you shake below this consolidation, where now the top, if you miss this long down bar, you play the 65-70 if you're still bearish as overhead resistance, because old support, new resistance. So this flow, the speed at which it came down.
Mm-hmm. That was what triggered me in right there. I got filled at 75, 74. It was the tempo. If you go back and replay this, if you have the ability, you guys at home, the tempo totally changed from that high up there as we started down.
Right, and then you knew you had them once it breaks 65, 70.
That's right.
That 5 cent area, because that's the bottom. That's these. What I like about my edge zones is not just the using them as support resistance, but when they're not working, it's like, okay, it's shifted. You get a nice imbalance right here at the top, and they just go through it like it's not even there, let alone these two guys. Now, these two guys were working. You got to remember in context, you got this green zone and this green zone. The market's coming down and bouncing off of these guys, and it's like they're not going to use it forever. They clip this quickly, and then these just fall. As soon as this one falls, which has been holding as bottom consolidation, they come and use it as old support, new resistance right in here. Now, the whole key is you were playing it from the short side coming in. If the bears, this is a half an hour into the open. So if the bulls aren't showing you anything, and they weren't after 30 minutes, you're leaning to the short side anyways.
And just look at the general trajectory or lack thereof, all this movement on the left, or just coming up until that point where it cracked. This is buyers trying to lift this market higher, which, by the way, this thing, let me run some quick calculations here. We rotated down 60 cents. We rotated up 60 cents. We rotated down 63 cents. We rotated up 33 cents. We rotated down coming to the open 53 cents. And now these guys are not able to lift us more than 19, 20 ticks over and over and over and over again. Such a small relative rotation size that the buyers are able to accomplish. So that's the only reason I was able to be very, very quick. And as soon as I saw those sellers start to just really crush the bids, I was able to join them. Otherwise, that's very, very early for me typically. Typically, I'm the guy that shorts 65s on the retest over, way after. Absolutely.
All in here. Yeah.
Yeah.
And there's nothing wrong with that. Old support, new resistance, and there's no
way. That's how most people should trade, I think.
You actually said something that's interesting that I want to follow up on is old highs and lows. When they're highs and lows for a reason, then you want to pay it. Sometimes highs and lows are just rejection. Maybe there's nothing going on. But you mentioned about, is a high or a low overnight there for a reason?
That's right.
And coming into today in oil, there was a reason why the overnight high rejected at those levels. Mm-hmm. So that kind of gives you more confirmation that maybe the downsides, there's some continuation left. But the only way you catch something like this is to put yourself in a position to be looking to sell it, and you're waiting for your when moment. That's the two circles that I try so hard to find, helping others to find the overlap. You're not going to catch this move lower. You won't even catch it in here, because you won't be looking maybe to sell it unless you're looking at this stuff, and it's not random to you. But you're not going to catch it certainly in here unless you're leaning to the short side anyways, and you're getting the confirmation or the when moment to actually get short. You can't still be on both sides of the market here, meaning I don't know which way it's going to go and then think you're going to catch the right side. If you don't know which way it's going to go, you're probably not going to catch that side. You got to have a probability lean to which side it might go. What I try to do first with people, but this is the first thing is forget about what direction you think it's going. Just work on the when moments. Then once you get that down, then you circle back to creating a more accurate or high probable opinion. Because a lot of times the anxiety, Merritt, is creating the idea, the opinion, because you could be wrong, and people hate being
That's
wrong.
right.
So strip that out and just say, I think it's going down. I'm just going to look for the skill set, the technique to get me short.
And people also hear things like, I don't know. There's a dozen different phrases I could quote, but they all essentially say, don't impose your will on the market. Don't think you're smarter than the market. Blah blah blah. And people hear about people that get caught with a bias, and they see that as a bad thing. Now, if your bias is unfounded on any type of structural thesis, then yeah, it's probably a bad idea for you to have a bias at all. But if you start to understand, and for me, it's market profile that creates the structure of the market that I look at how buyers and sellers are reacting to, so I can now have a bias. You can't have, let's put it this way, short and sweet. You can't have a bias without a clear line in the sand as to where that bias changes, where that thesis is now wrong and something else is unfolding.
You got to know where you're wrong before you, you got to know where you're getting out before you get in is what I was taught initially 20 years ago, first phrase. And it goes to what you're saying. You can't have a bias unless you know where that bias changes. And it doesn't have to change. It could change on a small time frame, but it maybe doesn't change on a higher time frame,
Exactly.
And you're waiting for things to kind of line up. What did you, let me see. I'll just tell you if I seen anything that got me out, because it's too late to get out after this happens. But I don't trade oil, but if I did and I was short 75, I wouldn't be looking for 58.08. I think it's great that you do, but I would have found a way to get out with a 20, 30 cent profit, a lot like you did.
Right. So I scaled some like 47 into that 840 low. Your time.
That's right in here.
That's right. I see some green starting to show up on your chart there. So that was me kind of getting out of that. And then so we come in down into the 850 low, and that's where something kind of struck me again. Sellers are really not pressing it like they should. Buyers again are coming in and really taking over the delta, really kind of pressing.
Well, what I see is that they're loading up on the bids down in here. They're absorbing
That's right.
On those two. So, and you're looking for a reason to get out too, you could say, I got, for me, I got these two zones. I'm not going to try to be perfect. I think what you said about not playing a tick, playing area, because if you're playing ticks, you're going to be tick sensitive and you're going to get out of good trades.
That's right.
You're going to get chopped up and out of good directional trades. But
my next scale before 08 was actually 58.30. That was where I planned on taking my next scale. Absolutely.
This, you probably seen the delta getting more red, but price not following it. In here.
That's right. And then just after that, you see the offers get more heavy and they really start to really get aggressive and pay up. And that's where I got out. I didn't get out until 49, so it was on that bar there. But
yeah. Well, here's the thing. I see the sequence of transitional moments, the long down-up bar, I call it. So this is giving me a probability that this is probably next. But this also did too, right? And so it wasn't higher, but it was sideways. It stopped the downside for a while. But it's just a two-bar sequence of a down bar followed by a quick up bar. Be careful thinking the downside's still the right side. It has to go sideways a while. It does continue lower, but then in here, let me erase this. You get a down bar where they're probing new lows, and then wham, they come up quick, and it's a holy SHIT moment for shorts, and then
Yep.
they just
You
walk
know what?
into
I
that.
will, if anyone, this is important, I think, for me and the culture that we have around here is I just shared it with you. There's the YouTube link of the recording of me making every one of these decisions that we're talking about in real time.
Let me share that with guys. Tom asks a real quick question. Ask him what he did to his TPO settings. On the oil chart, Tom? Did you compress them, Merritt?
Did I compress them? What does he mean? So maybe with this, maybe Tom's asking about the higher volatility recently, and did I change like my tick settings, like how many ticks per level?
I can't. Oh, I'm sorry. I'm looking at something else. Could you do me after this? Could you email me that link? I can't grab it. I can't copy it.
Sure.
I'm
Yeah,
sorry,
yeah.
Tom. He says he has more single prints, and he says you have fewer.
Okay, so that's right. Okay, so if you can't see my screen. But anyways, up at the top of my screen, it says TPOs 0.03 by 30 minutes. I suppose compression, absolutely. I choose how many ticks each level is comprised of. His is probably on a 1-to-1 tick basis, so he's going to have a ton of single prints. A single print at every single tick, I'm going to have them every 3 ticks. It's important for me, for my market profile view, to be able to see the past. Here, let me share my screen real quick.
Yeah. He asks why, and you just started explaining it.
Yeah, this is really important. I'll change it to what his looks like as well. 3. All right. This is something I teach every single one of my guys. Let's go to regular standard TPO 1 tick basis. Most people that look at market profile, they look at it like this. Look how much I have to freaking go up and down to like see what the heck is going on.
Right.
I lose all sense of awareness, which is the entire point of market profile for me. So I changed mine, and in fact, during this volatile time, we could probably change it more. I'll show you ES. I definitely change it. And by the way, I see some people look at market profile, and it looks like this. Okay,
the
like
extremes.
you're losing the features. You're losing any detail. It's no different if we were to look at a price chart, guys.
Yeah.
This looks perfect to me. This looks too compressed. And what the heck is this? What are you doing?
Yeah.
Right? It's no different with market profile. You've got to get it in that sweet spot to see the right amount of detail and the right amount of
well, it's like either your
content.
face is in the dirt or you're on a rocket
10,000 feet up in the air. Exactly. Let's get on a mountaintop where we can see some trees, the deserts. We can see the lakes below, what's going on, and we got a decent detailed view of what's going on. So to me, I can look at this immediately. I can see the features I need to see. I can see what's going on, value migration, where we're building, value and whatnot. I can see all of that.
And that's a 3 by 30 minute as opposed to
that's right.
4 by 30 minute, which would
that's right.
every one.
So here's more normal conditions. You really can get a sense for what this market's doing, where we've been.
I like that. That's always been an issue I had with profile is it's either too stretched. That's generally it. It's too stretched. And that's
in my market profile course, one of the first things we go over is scale and the importance of scale. It's huge.
Well, it's like
now,
go ahead.
I adjusted. If we go over here to the S&P, look at this. It's a 1.5, 6 ticks. That is, if we go way back in time, that is not normal. That is not. See, that's everything's a poor high and poor low. This is way too little of detail. You can't see what's going on here. But now let's go flash forward.
Because you adjusted it with the volatility.
For this volatility, because the ES volatility was almost, let's call it 10 times normal. So I adjusted. Usually I have a 2-tick setting, and I actually went up to a 6-tick setting. Could have probably gone a little more.
But generally,
it was just
you keep it normal conditions. What's your setting?
2. So if we go back and look at these normal conditions here, and I change it to 2. There we go. You can see the features. You can see the progression, what's going on.
This is just my personal question. What is it? I understand how it makes it look different.
Mm-hmm.
But what's it plotting difference between 1 by 30 minute and 6 by 30 minute?
Okay, let's
What's
bring
the technical
over
explanation?
Yeah. So we have something, I don't care what the market is, 1 cent, 2 cent, 3 cent, 4, 5, 6, 7 cents, okay? This is the price scale. On a 1-to-1 basis, it's and let's say that the market, this market, the bar chart looked like this for 30-minute period. Okay, so we opened at, 4. We traded down to 1. We went up to 6, and we closed at 5. Your 1-to-1 tick basis for this period, A period, is going to go A. It's going to draw 1 at every single tick. A 3-tick setting is going to do this. 3, we got 1A.
I got it.
So it's going to look like this.
2 A's instead of 6.
That's right. And then you can compress this scale in, right, to make these A's not look ridiculous. Like,
no, I see the scale on the side, the price scale.
We don't want them like this,
No. See, this is very similar to one of the first things I teach on a PNF is the appropriate number for rotation. It's a simple concept. A better way to look at the same thing from a, when you look at a price chart, a bar chart, candlestick chart, or footprint, your eyes have to float. How do they float and how do they follow the up-down rotation? Because that's how price moves. Price moves up and down. So your eyes have to follow that rotation. And I like PNF for the best look at rotation. It's similar to a better way at looking so it's not too spread or too compressed. It's a good distance above the ground. And that's good stuff. It's not something I expected to learn, but I did. So that's good stuff. Tom's saying thank you for the explanation.
Cool.
Any other questions as we're inside about 10 or 15 minutes? On a DAX profile, someone says they use 3 ticks and the volatility lately 6 was good. I don't think he's asking for advice. He's giving it. Thanks, Ken. Always get good things out of the UK guys. That's why I love them so much. Bruce from Indiana, you don't often get good things out of Hoosiers, but he's just, confirming what I just said. 6 and a 4. It's just a different perspective you have. Like if you have if I use a PNF that's way too high, it's like I'm showing 1 bar. So much happens in 1 bar. You look at it daily. It's fine.
That's right.
But so much happens within a daily. So you better be trading over days and weeks if that's your hold. That better be your hold time if you're only looking at a 60-minute or daily chart. And you better not get worried about taking heat, or heat's a different level as an investor than a day trader. And so you're also a big order flow guy, right? That's he's not just a profile guy. He's also an order flow guy. And because Bruce asks, since he came to the seminar, you are a big mix and match of these two concepts, right?
That's right. It's like multiple legs to a stool. If you cut one off, that stool's not going to stand. In my opinion, traders need a lot of different skill sets. They need even, general knowledge and whatnot. Then you move forward to understanding kind of price action and other participants, and you develop the right beliefs and mindsets and mental toughness. Then I think you need to understand context. You need to have a framework for understanding market movement. What is your framework for understanding market movement? What is your framework for being able to develop hypotheses on the day as to if-then statements, what could unfold? I used to be a pure price action trader, nothing but clean, naked charts. And then I found market profile, volume profile, and I added a framework of understanding auction market theory to understanding why what's going on is going on and where things change. A lot of times, if you get stopped out of a trade and you see the market just go berserk the other way just after your stop, that's really a compliment to you. It's a compliment because you're one of the first ones out the door at just the time where things were truly changing. There was a contextual shift, a shift in the current market condition. So you got to be able to do all that. Then you got to be able to go in and you got to apply tactics. And that's the category I would describe what Anthony's doing here and showcasing to you guys such a good job all the time. It's tactics. It's how are you entering and exiting? What are you looking for? How are you getting into the trenches with these guys and timing to execute on what your framework tells you is unfolding. Beyond that, you got to be able to put in all the work and develop and review and journal and prep and all these kind of things. Build out your playbook. Anyways, that's kind of my soapbox spiel on all these things that have to go into forming what I call a holistic trader.
Yeah, you can't shortcut it, and too many people try to. You even look at, you like patterns, everybody could recognize patterns. This long up-down bar keeps you from staying bullish, and it's not a coincidence it comes back up. So it's like a combination of pattern and order flow. Fast up, fast down, and you see the flow with the reds and the greens. So the downside motion we got comes off a pattern of stuck longs, and that's those two bars. Coming to the event and some of the order flow tactics that you use, what kind of overlap do you have with stuff that you've heard me talk about, such as the thin spots? You might not call them thin spots, or thin spots, just so people know, is when obviously just rejection areas. The market goes down fast. This is a thin spot. This is a thin spot to the upside. That doesn't work as support. Do you use not necessarily those phrases, but when you execute, what are some of the order flow techniques you're using to pull the trigger?
Yeah, so when you look at a footprint chart and whatnot, you really want to be aware of essentially two things. It's complicated whether it's two things or not, because both things always occur at the same time, but it's a question of which of these two things that I promise I will say here in a minute are more dominant at any time, okay? And that is typically, more times than not, aggression. That's the first thing you're looking for. Which side of the tape is being more aggressive? And then secondly, sometimes you actually have the passive participant who is the more dominant participant, and I call that absorption. I'm constantly looking for that type of aggression and if and when there's any absorption occurring. Another thing that's huge for me is what should have happened at different areas. And so several of the things that you and I have gone through, we've done this together twice now. We often find these places where, you know what, at this point in time, buyers took over. They should have been able to do this, and they failed. Like, you've got to be able to see those moments. Any idiot can post something on Twitter and say, here's what happened. Any idiot can do that. But it takes a real expert, a real professional to be able to say, Here's what just should have happened and didn't. There's a whole new level to that statement versus the first. Another thing I look for is general auction market theory principles. So by that, I really mean like balance and excess, right? So even when I'm looking at the order flow, I'm looking for, okay, is trade being facilitated as we're going higher here? Okay, volume's building, it's normal, okay. Let's say I'm stalking a short. Okay, volume's building, it's normal, nothing to do, sit on your hands, continue to stalk the trade. And then let's combine a couple things. One, buyers come in and they drive up very aggressively. Okay, I'm still going to definitely be sitting on my hands if I'm looking to be short. My contextual line in the sand has not been violated yet. We're all good, sitting on our hands. Let's see what happens. These buyers really flushed it up here, but the liquidity is kind of low. There's not much transacting up here. We're kind of zero buy. It depends on the market. You got to get to know the numbers for your market, for your footprint time frame to start to build the expertise. So stop flipping around different time frames, especially on a footprint chart, because you never learn what's normal and what's not, what's thin and what's thick. So you got to be able to see that. So let's say in this example, the buyers are in control, very strong, aggressive, but then the volume's really thin. And now all of a sudden we see heavier volume coming in and sellers really taking control. Boom. That's a signal for me. That's what just happened up here at the high. If there was a contextual thesis for that trade, that's what happened on my trade earlier. We were chopping around. Buyers drove it up. It was kind of aggressive, and then it was very thin volume. Sellers took control. Those type of moments, I think me and Anthony essentially do a ton of the same things. We have different terminology for it because we're both real traders, and we took what we learned from coaches and mentors and training, and we really made it our own. And we can speak a language which doesn't even use the same terms, and we're constantly just nodding our head at each other. Yep, I know what you mean there. Absolutely. So anyways, I'm being long-winded here, but those are some things I look for with order flow.
No, that's not long-winded. You've said some great things because there's always a better way to look at the same thing, better way to say the same thing, and it's always the overlap. They could be slightly different, but the key is to have an overlap, to have that second or third leg to keep the stool standing, to use your metaphor. But consistency, I'll leave people with that. I like to do more of these, and I think, Merritt, you're open to it, but we'll talk about it later. And because these are great sessions. I know they're great sessions for others when they're great sessions for me, and I know you feel the same way coming from our first event that we did in front of your group a couple weeks ago. So I'll get that link to you guys that Merritt sent. He just emailed it to me. But I appreciate you coming by, Merritt. This has been great.
Yeah, man, it's always fun. Thanks for having me.
If there's anything that I'll share with these guys, your information and everything else. But I look forward to having you back at some point in the near future. So,
likewise.
Yeah, so we could keep this going, maybe structure something out for people because, hey, if it helps people who know what they're doing, it's really going to help people who don't. And there's a wide collection of people in your group and my group. Some know what they're doing and some don't. And they're not afraid to admit it. That's why they're here. But
that's right.
You got to keep yourself in front of good people to do a lot of things that we don't do. But thanks again, and we'll stay in touch, my friend.
All right. Thank you, brother. Cheers. See you guys.
All right. You too. I'm going to stop the recording right now.